As we celebrate the founding of our country, here's a sobering question. Is America up for sale? Weak markets, the sinking dollar, and sky-high oil prices have made the U.S. very attractive to foreign investors. Early Show national correspondent Jeff Glor reports.
Everywhere you go these days, you see for sale or foreclosure signs.
We're trying to do a short sale. If that doesn't work, we're probably going to be forced into foreclosure.
We're struggling. We're having a difficult time, but you know, we know that it's tough for everybody.
But as Americans deal with what could be a recession, foreign buyers are rejoicing.
The U.S. is for sale at a discount price, partly because of the currency and partly because of oil and commodities are generating huge wealth overseas that make the U.S. look relatively poor by comparison.
The biggest buyers from Russia and the Middle East, fueled by oil dollars, with investors from Brazil, China, and India also making a mark. Mexicans too. Check out this Texas for sale sign. From across the border, they're mulling over lists of Lone Star properties. The weak dollar makes for a rising peso. And what bargains they're finding. U.S. home prices in April fell 18%. The median price was $202,000, down from $219,000 a year ago.
The economy. It's now weighing heavily on the minds of millions of Americans. A new CBS News New York Times poll shows that 67% of Americans believe the economy is getting worse, while only 3% believe it's getting better. Early Show national correspondent Jeff Glor is at the New York Stock Exchange. Good morning, Jeff.
Hey, Maggie, good morning to you. Yeah, it's an anxious day here on Wall Street once again. The Dow is at its lowest level in more than 2 years. The S&P at its lowest level since 2005. And this is not the only place.
The most difficult reminder that we're in a recession came this week in the form of new job loss numbers. Weekly jobless claims hit a 26-year high, with companies quickening the pace of cuts.
The job market is in complete disarray.
Bank of America will drop up to 35,000 positions over 3 years. The world's third largest mining company, Rio Tinto, 14,000 jobs. Sony, 8,000, and Yahoo, 1,500. In one case, workers rebelled. More than 200 staging a 5-day sit-in at a Chicago window and door company until they were guaranteed promised severance benefits. With fewer people holding jobs, fewer can make their mortgage payments. Part of the reason why home foreclosure filings were up 28% year to year. And there's talk that a brewing storm of new defaults and job cuts could force 1 million homeowners from their properties in 2009. One target of blame for this recession was spending. At all levels, people overreaching and not saving, which makes the final number remarkable. We learned this week that U.S. households have cut back on their debt levels for the first time in more than 50 years. The first time since these records were kept.
It does mean that we're starting to right some of the wrongs we created over the past couple of decades, but it's going to be very painful.
Very painful as Americans slowly try to shake what's likely to be the longest recession since World War II.
First things President Obama will do now that he's back is push his economic agenda, which includes getting Wall Street back on track. Early Show national correspondent Jeff Glor is at the New York Stock Exchange with more on that. Good morning, Jeff.
Harry, good morning to you. The Dow lost 186 points on Tuesday, and after wrapping up the worst first quarter in 70 years, the first earnings reports are starting to trickle in.
As Wall Street braces for rough earnings reports, they got their first taste with aluminum giant Alcoa, which lost $497 million in the first quarter. A stark reminder of a recession that has erased $50 trillion in global wealth.
I think the market wants to be upbeat, but unfortunately there's still a lot of bad news out there.
Bank earnings are weighing heavily on the minds of investors. Goldman Sachs, Citigroup, and JP Morgan Chase report their earnings after the holiday weekend. And with billions of so-called toxic assets still in the bank's balance sheets, there are bound to be more fluctuations, like the Dow's 20% run-up in March.
I think it's inevitable that as you get to a turning point, you're going to see the numbers move up, move down, move up, move down. That's just in the nature of the beast.
And if you think investors will be watching bank earnings closely, there's also that stress testing, the test the government is doing on banks to see if they're healthy and viable. Results will start coming out at the end of April here. Harry?
Jeff Glor at the Stock Exchange this morning. Thank you. Joining us now is Michael Santoli, Associate Editor of Barron's. Good morning, sir. Good morning. Everybody's been buoyed by this sort of rumbling in the stock market over the last couple of weeks, moving up toward 8,000, and now it takes a couple of steps back down again. Where is this market? Is there a light at the end of the tunnel? Is this springtime on Wall Street, or do we have more weeks of winter? Jeff Glor is at the New York Stock Exchange with the very latest. Good morning, Jeff.
Hey, Harry. Good morning to you. A couple more positive signs for the economy this week, including what may have been the biggest news of Monday for the markets, and that is the S&P 500 index is now in positive territory for this year.
Fed Chairman Ben Bernanke heads to Capitol Hill later this morning, and it's expected he'll temper signs that the recession is easing with a warning that full recovery is still far ahead. At the same time, Wall Street looks to build on Monday's rally. The Dow soared 214 points. The Nasdaq was up 44 and the S&P up 29, as spending for construction and pending home sales were both up significantly. Meanwhile, those bank stress tests come back later this week. The anticipated results, 10 of the nation's 19 largest banks will likely need more help.
There undoubtedly will be banks that need more capital. There have been banks in the last few weeks that have sought more capital.
The administration's hoping that if some of these banks do need more capital, they can raise that money on their own and not dip into the government's TARP fund, which right now has $110 billion left. Maggie.